probably those are all the technical things. So we are really happy to have you all here. I'm really excited for this session. And the reason we are gathering is to discuss pricing and how to tackle pricing if you're an early stage company. So this is what we're going to discuss today. We have participants from different companies. You do probably different things. So hopefully, we will have examples and cases that will be relevant still for all of you. Yeah, so ask questions. We want it to be interactive. And for myself and for Wojciech, we'll just introduce ourselves, but we thought about having the sessions with sharing like two hats, So one hat would be pricing advisors and pricing consultants. And the second one would be guys working in a VC fund, helping our portfolio companies to nail their pricing. So a word about myself, I'm Maciej. I've been doing pricing for more than 15 years now. I've been doing mostly, consulting pricing, but I also have experience running my own pricing boutique. I grew it to like 20 people and I sold it to a multinational. So I went through all the stages, of building a company. And now I work together with Wojciech at Movens Capital. It's a VC fund. And we help companies, our portfolio companies, but also some external clients, to nail their pricing. I did my PhD in pricing and I teach pricing at different schools, including like Stanford and others. I wrote 2 books on pricing. So this is about me. And now I will hand over to Wojciech to say a word about yourself.
Thanks, Maciej. And I guess similar to Maciej, what we share is the passion for pricing. Because this is something I've been doing for like Maciej 15 years, and then even before that I was focusing on profit and performance improvement. That's been my whole business life, and the last 15 years I spent focusing on pricing because this is tangible. This is something where you can get more money, more means to grow your business, develop your business, invest in your business, and that's why we're doing that. And I did that both as a pricing advisor and also as a internal pricing guy, doing design and implementation of pricing solution in one of the biggest crop protection corporations in the world. And then after that, which was in Switzerland, I came back to Poland, where is my base, and joined forces with Maciej. And we support companies at various stages, including seed stages and maturing stages, so that they can leverage on that and develop the business, not only the products, but also the pricing approach, so that they can be profitable. And the experience from that we're going to share with you today.
Yeah, okay, so let's jump on it because we've got plenty of content. So the reason, we thought, to have this session is that we have a lot of companies approaching us and asking, to help with their pricing. And what we see is that there are like those kind of two tendencies. One is that a lot of companies, they set their pricing on an instinct, or they do hardly any research for all sorts of reasons. I read somewhere that if it takes you like 1.5 or 2 years to get to your MVP, usually a company would spend roughly 4 hours on how to build their monetization scheme. So this is pretty bizarre, but hopefully it's going to change and we will be able to support you with that. So this is one. The second is like, a lot of companies, they think pricing is that like, once you fix it, then you never should just touch it, which is absolutely bollocks. Pricing is a process, and also like you need different pricing scheme at different stages of your journey. This is another important thing. I can give you examples, from all sorts of companies, starting with the most basic one, like Netflix, Now they have a totally different pricing plans than they had when they were launching, for a lot of reasons. And I'm not saying that the one they have today is better than the one they used to have. Simply the one they used to have was more relevant for the stage that we're at, let's say 10 years ago. So this is another thing. Like also pricing, it's not like one size fits all. And we see it, very often, there is no silver bullet. So like we usually say pricing is like a hammer, and some people, they need a small one and others need a big one. So you need to know which one would be most useful for you. And this is what we help our companies, to select, and then, to build your own pricing hammer. So yeah, those are the things. And what we're gonna show today is how we think about pricing and how you can tackle pricing in SaaS tech businesses. Then we have a section on business cases and examples. And last, if we have enough time, we can show you our methodology, how we do those pricing support projects. But based on my experience, there's going to be so much content in the first two sessions that we might not have enough time. But let's see. So why, I would say that pricing is such an important thing. I don't know if any of you read the book Tool of Titans. It's a book by Tim Ferriss. It was like a #1 New York Times bestseller. And what he does, he has a podcast, you probably know, he wrote a few famous books. And in his podcast, he speaks to a lot of, let's say famous people, entrepreneurs, celebrities, sport athletes and stuff. And one of the interviewees is Mark Andreessen. And in the interview with Mark Andreessen, who's, as you probably all know, he's a founding partner for Andreessen Horowitz. He asks him, if you could put a billboard anywhere in the Silicon Valley, what would it say? And he says that the billboard should say, raise your prices. That would be his main message to the funders. Because like what we see very often is that a lot of startups, they have this tendency that they are too hungry to eat. So you just want to grow so fast that you don't really think how to monetize this whole customer base. And then, like a bit like shifting gears, and seeing what's happening, in the market these days, mainly speaking now from the VC perspective, for us as a VC fund, having a solid, pricing scheme and customers that pay for your product or service is the best justification for your product market fit. And because like it's relatively easy to give away something for free. But then, if you have to convince people to pay, then this is really where really the rubber hits the road. So this is the best verification if what you've built has any intrinsic value for the customers. So this is one thing. And then, as I told you, like pricing is like a tool, like a hammer. And it allows you to achieve your goals. And I would say that usually the fundamental question is, what do you want to achieve with your pricing? And you would probably have those three goals. Either you want to get customers, so you want to attract them. You want to boost your customer base, so you want to monetize your customer base, or you want to keep the customers that are prone to churn. And so what I want to tell you is that you can have pricing for each of those segments if you do it right. And then later in the session today, we're going to give you examples on that. But this is, the first pool I would like to start. So it's a simple question, like if you think about pricing, what is really your priority? What do you want to achieve as a goal for your pricing? Is it to grow your revenues, like MRR? Is it to grow your volume, like number of customers? Is it to earn money, so profit generation, or is it market share? So if you could just give your answers here, and then we're gonna see those in just a minute. Okay, so let's give ourselves like 10 more seconds and we're gonna close the pool. Okay, let's close it now and share the results. So this is pretty interesting, I would say, because most of you said that you focus on your revenues. Well, this is not so, I would say, not strange. But then the strange thing is that 40% of you said that you want to focus on profit generation. And this is, I would say, in real life, hardly ever a case. Because we see a lot of startups, they focus either on revenue growth, on volume growth. But if we have guys in the audience that focus on profit generation, you're already further ahead than a lot of the others guys. Okay, so we're gonna close this one now. And I just want to show you, you know, like where you should look for extra revenues or extra profit, you know. This is like the result of a survey showing, you know, what is the impact of on revenues, you know, when you like really improve your pricing, either when you work on acquisitions, so we're getting your customers, on monetizing your current customer base, on your retention. So what you see here is that really where you should focus on is on how to monetize your customer base. This is where you can earn most of your money or generate most of your revenues. It's not really on acquisition, and this is crucially important. I will later give you an example, you know, on how to do the kind of the whole freemium pricing model right and in a wrong way, which will just prove that just having a right acquisition model is not sufficient for having a successful business. So moving on, you know, this is another example just to prove that pricing is important. If you go to like Sequoia Capital website, they have a whole section on pricing, you know, and what they say is that a lot of startups, they only focus on this, you know, kind of, you know, gap between, you know, the cost and the price. And as long as the price they charge is higher than the cost, then that's okay. But what they forget about is that hopefully the perceived value is even higher than the price they charge. And this is what we help our clients and our portfolio companies to capture the entire, you know, delivered value, and to build a model that supports that. So I will clear this one and move on. Hold on. And if you don't believe, you know, Sequoia and Mark Andreessen, maybe you're going to believe Warren Buffett. And he said once that, like for him, the single most important decision in evaluating a business is a pricing power. So basically, a company that has a pricing power is not afraid to raise prices. And if then the company would ask a price for the product or service, then customers would be okay to pay for that. And this is the kind of companies this guy would invest his money. So this is another example showing why pricing is really so important. So now, just to give you a bit of, you know, overview, what we see are the most typical challenges in SaaS pricing. You know? So first, there is lack of structure and consistency of pricing. So there are different pricing plans. You know, it's difficult for the sales team or on the website to explain what are the differences between those plans. You know, who they really aim at. Then, you know, companies, they don't know where to look for price increases. And then they would say, okay, so we want to increase pricing, so let's increase all our prices by 5 or 10%. This is probably the worst way you can manage your pricing. There are far better ways. But if you don't know how, then, you know, this is the only option you have. Then we've got too much focus on volume or on revenue rather than on profit or on growth. So what you need to know is you need to know which KPI you want to optimize using your pricing. A lot of startups and SaaS tech businesses, they don't understand what is the willingness to pay their customers have for their products features, or product bundles, this kind of stuff. So then, you know, if you don't know how much a customer is willing to pay, it's difficult to set the pricing right. Then that's why, you know, a lot of times, you know, you've got we call it finance-driven pricing. You know, so you know what is your cost you want to cover, and then you say, you know, so this is the price we should ask, you know, to cover our cost, and then generate, let's say, 20% margin or 30% margin on stuff like that. Just try to understand. It makes no sense, because like if you just change roles, you know, and if you're a customer for anything, you know, do you really care how much it costs to manufacture or to deliver a product? You don't. What you care about is the value that the product or service delivers to you. That's why this kind of, you know, point number 5 is very suboptimal way of doing pricing. Then you've got a lot of pricing exceptions and discretionary discounts. Maybe it works when you start your business, you have really, like, you know, a handful of customers. But then when you want to grow your business, you need to have a process and a structure how to do this pricing, because then any exception will work against you. Because if the message is going to spread that you give 40, 50, 60% discount of your list price, then it's going to be difficult to explain new customers why they don't get the discount that the other customers got. Then you have very little price analytics. I'm really surprised that so often, startups, they don't really know how they position themselves versus the market or the competition or any alternative products. It's difficult to kind of do your pricing if you don't know what are the alternatives from your client's perspective. And last but not least is, that there is very little pricing governance. As I said, pricing is a process. It's a process that should be managed. There is a data that should be analyzed. There should be conclusions drawn upon, and then, price improvements being made. So those are the challenges that we see. And what we're going to do today is try to show you, how you can address those. If you have any other challenges in your pricing, share those in the Q&A. And also, I want to show you why pricing is so important. So this is another study, and what you see here is, what is the profit improvement if you optimize any of the 4 levers. Just to simplify, you can improve your bottom line just working on those 4 different let's say widgets. So it's either fixed cost, quantity, variable cost, on price. And just I don't have a data for just SaaS, but I have a data for software. And then you see that price has by far the highest impact on the profitability of a company. So that's why we want to encourage you to have a closer look and a forward look on your pricing policy. So this is the thing. And now I'm gonna hand over to Wojciech. Before that, I will just try to remove my drawings. Yeah, hope it works now. And he's gonna guide you through the concept of value delivery and value extraction, which is pretty crucial when you want to understand how to do your pricing. So over to you, Wojciech.
Yes, yeah, so you know what? First things first, and this is the fundamental element of the pricing game. This is value delivery versus value extraction. And value delivery is nothing else like delivering your product or service. And usually companies are good at that. If you have a good product, good service, that's fine, that's okay. And as I said, many companies got it right. But the other side of the same coin sort of is value extraction. And how do you extract value? You extract the value by or via price. So in order to make it equilibrium, you need also to manage properly value extraction. And value extraction, as I said, in terms of price, how to do that. And if we move to the next picture, if you were to extract the value properly, you need to answer a couple of fundamental questions. Like, first of all, which elements, which factors of your offering create value for your customer? And how important are those? And how are you perceived through the lenses of those attributes, so that then you can price accordingly? So those 4 questions are the starting point to evaluating how much value first you deliver, because then equally you want to extract the same amount of value. And how to do that? If we move on to the next picture, first of all, and that's if you look at the left-hand side of the picture, first of all, you need to understand, meaning which factors or which attributes generate value for your customer, the middle part of the block, and then translate those or kind of quantify those, measure those so that they become more tangible, and then communicate that properly to your customer, because then and only then when they understand and perceive the value, they will be willing to pay for that value in the form of the price. And then you can get the equality between the value you deliver and the price you can extract. So that's the main thing. And how you do that? So, before I explain you how you can do that, let's have a systematic view on various pricing methods. Maciej already mentioned about the cost plus pricing. And by the way, in the meantime, if we could start another poll to ask you which method you're currently using, that would be great. So first method is cost plus. And this is simple, and everyone gets that because you take your cost base, add something on top, and you have the price. The thing is, though, that first of all, it's not always that straightforward to have the cost base right. The other thing is, what should be the markup? Should be the 10, 20, 30, or maybe 50%, or maybe more. Obviously, if you get the math right, you will have the positive effect, so you would be profitable, but the profitability might not be, and usually is not the optimal one. So that's the first method, and still many companies are using this method. The other method is competition-based, and this competition-based method, what you do, you look around at your competitive landscape and try to compare yourself, usually assuming that is like apple-to-apple comparison, one-dimensional, and you position your price like the others, or maybe a little below, so that you can catch up with the market share, and that then you get that. And again, it might be not exactly apple-to-apple comparison. You might be leaving some money on the table. So the most effective method is the value-based pricing method, where you kind of decompose the value you deliver in your product to the customers, and then you look kind of one by one, seeing or looking how much value you deliver in each of the attributes, and then have a holistic view, and you get that. So based on your evaluation, it's unusual, sort of, so you might be really advanced crowd, because most of you, like 2/3, are using already value-based pricing methods. That's great, if that's really the case. Still, some of you are using competition-based or cost-based methods, which I would only encourage you to reconsider and do the value-based one. And how you can do that? Let's move on to the next picture. First of all, if you get it right, you will address 3 C's, which is the company point of view, what you deliver, what is your offering, the client view, how are you perceived by the customers, and then competitive element, meaning how do you place yourself in the competitive landscape. And if you do that, or if you want to do that, moving on to the next picture, there are actually 2 ways to do that. One is, which is a combination of the matrix of competitive advantage and how it works. Let's look at the left-hand side of the picture, is that you decompose your offer into elements like attributes, and then you look at those through the lenses of 2 dimensions. One is the importance, axis Y, and then evaluation of performance, axis X. And the thing is that, that could be attributes like quality, availability, speed of delivery, brand equity, and so on and so on. And like in this particular example, number 1, which happens to be quality, this is a good one because this is something important and your evaluation is good, or performance is good, more to the right. So that is your strength. Whereas number 2, which is very important, actually the most important element, well, your performance and evaluation is like in the middle. So competition, or quite some competition, is doing better job here. So that's an average, okay-ish point. And like number 5, something still important, but you are weak here. So this is something you should consider to really improve. And that gives you a picture where are your weaknesses which you should improve, or maybe like number 6, something you're really great at, but this is not that important. So it might be you over-investing here, not that important. And then if you take this overall picture, importance and evaluation, kind of multiply all of those elements to get one figure on the next picture, which is the index of delivered value. That is something representing how much value you actually deliver. And this is something when you, or what you can and should compare to the pricing and your pricing positioning. In this particular case, you know, you are a company like in the middle of the pack. So your delivered value is in the middle, but then your pricing you should consider through this level of value, because like if you compare yourself to company E, although the price of this company is lower than yourself, you might have price potential. Why is that? Because the value delivered by this product, this company, is much lower than yours, and to be in kind of on the same fair value line, you might still consider raising the prices. Equally with company B. Whereas if you compare yourself to company C, well, this is something that if you were to be on equal or on par with the company C, you should consider rather lowering your price or improving the value delivered, and how you might look at the individual attributes of your offering. So that's first approach, which is value map approach. And that the beauty of that is that you have many you can have many companies competition placed on the same picture. Another approach which I like even better is the next one, which is more like waterfall approach. And how it works. What you do here, you compare yourself to kind of next best alternative to your customer. So your customers have alternatives. Is it your offer and it's another offer, and might be a couple of offers. And if there are a couple of alternatives, you can run this exercise a couple of times, and you can have 2 or 3 waterfalls. Just, you know, looking at this one. On the left-hand side of the waterfall, you have the reference point. That's the price of your alternative or competitive offering. And then looking like your customer, you look through the important elements of the offering, like, for example, time savings, level of errors, quality, reporting features, brand equity, simplicity, agility, and so on. Okay, and each of those elements you might have either advantage or disadvantage compared to the other alternative offers. If that's the advantage, that is a plus and you can charge more. If that's a disadvantage, it should be considered as a negative adjustment. And then if you look at that in a holistic view, sort of sum it up, add it up, you will get the at least potential price level of the right hand side of the waterfall, of the right hand side of the flag. And that is something which gives you the level. And if you happen, or your price happens to be below that, that's where you can adjust. So those are those 2 approaches which you consider. And then how do you apply those across your portfolio of clients? Maciej will explain you that. So over to Maciej.
Yeah, hopefully it works now. Okay, so now I'm gonna shift gears a little bit and speak about, you know, market segment, competitors, and buying personas. So this is an important element of building your sales strategy, but ultimately also your pricing strategy. So what we encourage you to do, and what we do with our clients and portfolio companies, is to build something we call a competition map. So you've got, you know, different customer segments or buying personas, however you call it, and you've got different, you know, products. And within this map, you can just see where are your, like, say, strong kind of, you know, markets and where you have weaknesses. It simply gives you a bit of guidance on where to focus in the first place when attacking, you know, the market with your product or service. So this is a bit like a roadmap. So, and then what we see often is that companies, of course, they say, we do customer segmentation. But what they do, they use, we call them descriptive features, you know. Here, I would just give you a funny examples for this one. Now imagine that there's a guy, you have a product for males that are born in 1948, they're raised in the UK, but they're married, they have 2 kids, they are rich and famous, and they live in a castle. So think for a second, who might that be to fit into your customer segmentation? Because this is a pretty well-defined, as it seems, customer segment. So ultimately, you've got those 2 gentlemen perfectly fitting this description. It's Prince Charles, and Ozzy Osbourne. So though they both fit into your segmentation, I wouldn't say that they necessarily have the same, expectations and they have the same needs. So what we do when we build let's say need-based customer segmentation rather than this descriptive customer segmentation, we help companies to understand what different needs we can serve with our product. And then obviously you need to find the right balance, because you shouldn't have this segmentation, too differentiated, or it shouldn't be, let's say, not differentiated at all. It also depends on, what stage of development you're at. So today I was using the example of Netflix. When they started, they had just 1 plan. Today they have most probably 4, if I remember correctly. Why? Because like on the journey, this is, where they could move, because they had their customer base understood their product, and then they could expand and give different variants. But if you just overcomplicate it in the first place, then you can get a backlash from the market that will not understand what you ask your customers to pay for. So this is the thing. Just one example of a medtech company we worked for, that they defined, let's say, 2 or 3 target markets that they wanted to address in the current stage of their development. So we had those segments defined in those 4 different parameters. It was region, channel, so how we want to approach those, what kind of customers those are, and what product and services we want to offer them. So with this kind of map, it's so much easier for your salespeople to go to the market and to sell the right product to the right clients, and like if you want to start with this kind of segmentation, or if you want to validate your segmentation, I would say that the best, let's say, or the simplest way to start is to have this kind of approach. We have those 2 axes. One is what is the risk of losing a customer, and then you have the potential value of a customer. So then like what it shows you is that with those different segments you could play differently. Just starting with the low left corner, like those are the customers that don't really have a great value to you, and you don't really have a great risk of losing them. So this is the perfect segment to test possibly new feature, new approaches, new pricing models as well. So and then you can learn with this kind of segment. And then, just speeding up, in the top right, obviously those are the customers that have the highest value to you, and they are most risk, to churn. So this is the one that you should really care about the most, and you should deliver extra value and just do this extra mile for. So what it also shows you is that you don't have to just give everything to everyone. You can just selectively approach those different customer segments. This is another example, of need-based customer segmentation. So in this case, we had 4 different segments. Obviously, we had a low price segment, and you're always going to have this segment. So hopefully, it's not going to be the biggest segment in the market, but it's always going to be there. And then for them, you should have this kind of a plain vanilla, no frills approach. And also, you shouldn't really focus on them in terms of service, But then, for instance, in this case, we had a segment that wanted to have an easy start. Then there was one that wanted to have it now. So they wanted to be able to launch a service within, let's say, 15 minutes, because it was like a burning need for them to have it. And then, there was a segment that was willing to pay for all the bells and whistles, that wanted to have it best. And for them, we had, the premium package, and then, they paid extra for that. But like in your case, you can have more segments, fewer segments. It all depends. As I said, we are more showing you today approaches rather than, solutions. Another thing I want to draw your attention to is to really just do this test and understand how do you position yourself versus competition. So this is an example of one of the projects that we've done. So we asked the salespeople, what are the prices that your competitors, charge? And then, what it turned out that the sales, and then we run a bit like mystery shopping kind of thing to really test, what was the reality. And it turned out, the market is in a totally different place than the salespeople think it is. So then, like imagine that you go to a customer and you think that your competitor is at, let's say, 80, but actually the competitor is at 100. So then, you already build this additional pricing pressure within your mind, and then you already feel inferior to someone else, So that's why, I encourage you to run those mystery shoppings, so that you know how you actually position yourself versus competition. And now I want to speak a little bit about, product bundles and product architecture. So when we build a pricing model, there is a lot of, work and technical fine tuning on how to do this, do those bundles, So we want to build those so that they address, the right value drivers. I'm going to speak about it in a minute. And then, that they are like differentiated in a way that helps to address different customer segments. So I'm going to speed up a little bit and then move to I would say one of the probably the most popular concept. I'm not saying this is the right one, but it helps me to get the grid for explaining, how to build those different bundles. So it's called good, better, best, but I would rather call it best, better, good, because based on our experience, actually, as we read left to right, it's better to start with your best offering and finish with the cheapest one, rather than the other way around. Just to cut the discussion, data shows you have the biggest acceptance of those let's say higher paid packages. Of course, 3 is a good number, but then you probably have examples of companies that have 4 or 5 packages that are also successful. But what it allows you to do basically is to compare, different products, different price points, and different features. And I would say it's good to start with 3 and to see how you fit. But still, that there are some problems you can face when you build those product bundles. The first problem that a lot of companies face is that they put too much value or too much, features in the basic package. Obviously, there is this urge that I want to have this basic package relatively cheap and relatively good, so that I will have a lot of good customer acquisition. Maybe you will have a good customer acquisition, but it's going to cost you extra because it will be difficult then to upsell those customers to the higher packages. So that's a problem number 1. Problem number 2 is that like a lot is being said about psychology of pricing, behavioral pricing. Actually, even myself, I wrote a book about it. And then you say that you should just steer your customers into the middle option. Of course, that's true. But the problem is, if everyone goes for the middle option, then you just leave on those 2 other potential customer segments. So obviously there is a let's say a default option, but you shouldn't forget that maybe those other options should also be something that your customers might consider. Then the next problem is that you've got unrealistic comparisons. So packages that have so huge differences that it's difficult for customers to compare those. So actually there is no choice for them. And finally, then you have too many, let's say, ways to adjust your package so that you can really customize it And the problem is basically the cherry picking thing. So customers would only go for the options that they actually want, and they will not go for the ones that they don't see the value. And now just a sentence about price promotions. In general, I'm not a fan of price promotions. Guys, with SaaS tech, especially SaaS tech B2B, you're not selling shampoos or Coca-Colas or this kind of stuff that you have to do all those weird consumer promotions. Actually, I'm gonna just show you that it can work the other way. The only reason you should do the promotion is that when you have a customer that would already answer yes to the two questions, where why do I need it and why do I need this product or service from you? And only then, when you just want to close the sale, this is the only moment that you might consider using a promotion. Because otherwise, if you use promotions just to adjust your price levels to the market or to the client needs, then it doesn't make sense. Why? Because this is the data, and it shows that the willingness to pay at renewal is decreasing if you give discount at initial contract. So think about this chart when you think about giving extra discount for a new customer, where for the first contract. So I see that we've got questions coming. I will try to answer those maybe at the end of my session. I will speak for another, let's say, 5 to 10 minutes, and then I will just maybe shorten the Q&A. Or if you can stay a bit longer, then we can extend this webinar and then answer those questions. Another important thing that you should consider when thinking about pricing is something we call value argumentation. So like we see that really the reason that you have to give those discounts is that you don't have proper value and competitive argumentation that would enforce the price premium. And without it, then price becomes the only selling argument. So just if you go through those 6 steps here, I will send you the presentation later, then you might have a chance to ask for the price premium. In the follow-up webinars, we're going to have definitely one session dedicated only to value argumentation. I believe this is absolutely crucial for successful, startup development. Because, yeah, as I said, if price is the only argument in the discussion, then any price would be too high. And now I will just give you a couple of those examples of value communication and product bundles. So maybe those examples will be a bit kind of, let's say, funny, but just to explain to you the concept. You cannot just do it in a too simplistic way. So you should be able to explain to your customer or to a buying persona, how does it make your customer awesome in whatever way. Otherwise, they will never be willing to pay any money for what you deliver. So, and you shouldn't speak about the features, you should speak about the benefits. So what's in it for me? This is the question that your customer is going to ask you. And then you need to have an answer to this one, and not answer in terms of technical specification, but why should I pay extra for that? So probably you've seen this one, but this is exactly what you should be able to do. To explain, what's 1 GB of storage or whatever else, how does it translate to customer benefits? Here I will give you a bit more like relevant features from some companies you probably know. So this is how Slack explains, why it's good to have Slack as a system for communication. That it allows you to have, fewer emails and fewer meetings. So this is a very tangible benefit of having, or paying for Slack. So this is a good justification for paying extra for this. And this is another example. I will skip those because we are running out of time, from Wrinkle, and there is another one from Nuance, just to explain what is the value. And now, speaking about some of examples, so a lot of discussion and a lot of time we spend with SaaS businesses on selecting the right, pricing metric. So the pricing metric is what you actually charge for. And as one of my good friends said once, and I love it, pricing should encourage abuse of your system instead of limiting the usage. And here, really, you cannot spend too much time on selecting the right value metric. Because like for whatever reason, I know for what reason, like I would say 8 out of 10 companies, SaaS companies, they use, per seat or per user pricing. I will just, explain why, but I just forgot that this is the right time for the last pool. So if I can ask, to just launch the last pool. And here I will ask you, what price metric you're currently using. So give your answers, is it users, is it seats, is it hardware features, is it customer size, or you do a bit of like success driven thing? So answers are just coming. Let's give it like 15 more seconds. I will just sip some water. Okay, so I think we can just close it and show the results. Okay, so a lot of you claim that you do this, let's say success driven pricing. I would be curious to know how you do it, because the other thing, I'm not saying that you're kind of lying or nothing, I'm not implying anything, but what we see that when we start those projects, we hear a lot of, of how good a pricing system is, but then when we dig into details, it seems not to be as good as someone thought it is. So that's another reason sometimes why it's good to have some external expert to have a look into your pricing, to give you a tangible score on your pricing. So, but basically what you said is that, there is like a bit like even, distribution. But still, what we see in our experience is that most of companies, they use this, let's say per user pricing. Well, it's if you do it, I would say that this is the relic of the, I would say like 80s, when you had Windows, 3.11 on floppy disks. Then it would make sense. But since then, really, world did change in the last 40 years, believe me. And you should also think about different pricing approach. And what used to work, in the 80s, for Windows, 3.11, it might not be the best option for you today. So, but still, for some companies, this, per user pricing still makes sense, And I just don't want to go in details here. We'll have another, let's say a dedicated webinar on those pricing metrics, It's really important to select the right ones. Just to quickly explain, how should you select the right pricing metric? You should go through those different steps. First is, we call it value alignment. That's the metric aligned to customer value criteria. So do your customers pay for what they value or where they see the value? Second, is it scalable? So does it allow you to grow in the long term? This is usually the biggest problem with seat-based pricing. Usually what you have those, couple of, call it black belts users, but then the rest of the people, they don't really want to use it. They don't see the value. So it's extremely difficult to grow your business with the per seat pricing. Then, it should be predictable, because so your customers need to kind of budget your solution into their system. So otherwise, they might not want to go for you, because just for the fear of not knowing how much they would pay in the future. So then, it needs to be auditable. So you need to agree how to measure the thing, and then, it needs to be accepted. So yeah, I will just skip those because we are running out of time. I wanted to tell you that there are different methods how you could charge. It can be flat, it can be incremental, it can be progressive, digressive, all sorts of ways you can do it. I'm not gonna discuss it, but I will just now quickly go to few examples in the end. Like with pricing, you can beautifully optimize your LTV to CAC ratio. So basically, the better pricing, the higher the LTV, the more you can invest, the higher your valuation, and the world is beautiful. If you have the wrong pricing, you know, then this ratio is just 1-to-1 or even worse. So that's another reason why you should have a closer look at your pricing. You know, it allows you really to get an extra boost for your business growth. Now, just a word on, you know, freemium, because a lot of guys, you know, they say like freemium is the best. I'm not saying freemium is bad, but, you know, before you jump to freemium, you know, consider some other options, because the issue with freemium is that you have a lot of users, but you have only few users that really pay you. And then, you know, as it was the CEO of Evernote once said, you know, the easiest way to get 1 million people paying you is to get 1 billion people using. You know, if you can get 1 billion people using your product, then I think you're good to go for freemium. Otherwise, I would think about some other options, because look at those conversion rates. Of course, it's not a rule that those conversion rates are low. You know, here I will give you an example of a B2C, a Spotify. You know, like whopping, you know, like 40-something% of Spotify users, they have a premium version. Why? Because what Spotify managed to do is they managed, you know, to build those, you know, free and premium bundles in the way that allows, you know, just justifies paying those extra $10 for the premium version. So this is a great example how to use the freemium. So now I have a few more examples. I will just here show you an example of Slack. I'm using those kind of celebrity companies because it's easier to explain those, you know, to the broader public, you know. So look, you know, with Spotify, with Slack, you've got those 4 different plans, and like those plans, they are, let's say, directed at different customer segments. The free one is just if you want to test it. So you can say that it's a bit of like a freemium version. But then you have a plan for small businesses, you know, for large businesses, and, you know, you have the full option that, you know, just shows, you know, what are all the, you know, extra things we can do for you. And really, you know, the guys, you know, at Slack, they spend, you know, I would say a lot of time understanding which features should be placed in which, you know, bundles or in which plans. And then once they've done this one, they moved, you know, to the price optimization. I'm not speeding up, you know, just have a look at Zendesk. This is another great way how you can just present a very complex, you know, pricing system in a reasonably, you know, easy to understand way for customers. You know, really, you know, like this is for me a great example. And just to finish off, you know, let's have a look how Netflix does it, you know. So currently, I thought that they have 4 plans. They actually have 3. So, and like, even for the base one, you get all the content, you know. So it's not about the content. It's about, you know, so the content is, I would say, a basic thing in their case that you should not limit. But then what they did is that they thought that, you know, once people understood what Netflix is about, there might be a segment that's willing to pay extra for extra resolution or for having extra screens, you know. So it just gives you a choice. And like in this case, with those extra plans, you can just cater to additional customer segments with a different willingness to pay. Sorry for rushing, but I wanted to finish, you know, in 1 hour. As I said, you know, there was a lot of content. So I see that we've got some questions now. So for those of you that have to run, just, you know, just go and run. Then, you know, if you want to have the recording of the session, or if you want to get the presentation, just let me know. I will be happy to share it. If you have any more questions, I'm happy to share it. So thanks for joining. And if you can still stay, let's say 10 or 15 minutes more, I will try to answer the questions that we had. So so answering the questions, here there is one, this is about the section, that Wojciech was running, in the importance evaluation, should we include over-delivering value criteria?
You know what, Maciej, maybe I address those questions. There are two questions, actually. I will start with the one that you have some over-delivery in a criteria or a future which is not that important or not that relevant. So let's consider, Netflix example. And let's consider that Netflix would come up with the idea, let's charge something more for 3D, let's say. And 3D, movies would not be something that market would value. And they would spend a lot of time, money, investment to deliver that. And then it would be an overinvestment, because if there was no demand or little demand, why would you do that? Then that would be something I would consider overinvestment, and then rather reconsider whether this is worthwhile investing, or maybe the money would be better spent on something else rather than 3D. Or another example could be, in a system, if you have a very specific, reporting features, they might be good, might be value, and then that would be good, because if you deliver and then you have value and performance, that's great, you can have a strength fee. But if those would be not important to your clients, this would be overinvestment. Okay?
Alternatively, what you can do is you can consider those as add-ons, So this is the kind of feature that you said that there is a WTP, so there is the willingness to pay, but it doesn't have that much value to customers. But I would say that it might have some value to some customers. Exactly. So probably, those are the features that you can make as options, kind of a la carte, if you understand this value. So maybe this is something, you're willing to pay extra. So exactly. Like this is another way you can address those.
Yeah, exactly. So, instead of putting them or bundling them in a plan, make an extra, some extra feature. And then one more question was if an over delivery could be a criterion. Well, it could if customers would value that you go an extra mile, and then you are perceived in this element that you really go an extra mile, and that's your great performance. Then it potentially might be an evaluation criterion. Still, do it carefully, because usually there are attributes where you can deliver great value or middle value or lower value. So not to overlap the same evaluation you might have already in some other attributes.
Okay, so thanks Wojciech for those. So I will try to answer some other questions that we have. There's one, why does user-based pricing make sense for Slack? The explanation is, Slack is a platform. So the more people in your company use Slack, the bigger the value for the entire company. So it's not that only a few geeks use it. I would just compare it. In this case, Slack is different to a BI. For a BI, it's usually abused by few and then not used for the rest. But with like Slack, it's different. The more people you have in a system, the more value you have. It's like this kind of a platform effect. So that would be the main reason, or my main explanation why for Slack it makes sense to have user-based pricing. Then we have another question. With value-based pricing, do you have any good examples on how they're identified the different value points? I know what are the value points and how they validate and how to validate them with customers to give cost benefit. Okay, so I would say that there are couple of, basic ways. I'm a fan of testing. So I think, for some strange reason, you are okay, to test different, product features, different scripts, and stuff like that, but you're not open to test different, pricing options or different pricing models, and like the beauty of SaaS is that, you can test different pricing models with different customer segments. As I said before, like you have this segment that it's not really so valuable for you. This is the best way, or the best way to start your pricing testing. Or you usually have those, early adopters that absolutely love you. You can turn to those, to simply, verify your pricing options that you're considering. So hopefully, this one answers, this question. So we've got a lot of comments saying that it was great. I'm really flattered. So promotion for upselling is okay. I would say not really, because promotions are okay if you want to really close the deal and that customer is just hesitating. Promotion is not okay if you have a customer that's not convinced that this is the right price for your product or service, and you use promotion to adjust the price level to the customer expectations. Then you should more turn to this value argumentation, or to explain, the value delivered, rather than adjusting price with promotion. Hope this is the right this answers these questions. Are the strengths comparable to the set of features that LinkedIn got down to when they looked at pricing the pro plan after features used by only a few, but so often that they depend on it? I would say to some extent, yes. Yeah, to some extent, yes. And really, like I can speak, hours about, pricing for LinkedIn. So I think I could share a lot of insights, but like, look, the beauty of, LinkedIn is that they managed to charge you for a service that used to be free for like, for, I would say, for years, if not decades, just sending messages, So if you want to send messages on LinkedIn, you have to go to the premium plan. This is just absolutely, amazing. So let me see some other questions. Some are really, I would say, very technical. Okay. There are some features where you are much better. Okay, so this is, we already answered. So I would say that those are all the questions that that we got. If you have any, we've got any latecomers, just come over and ask your questions. Okay, so someone just wrote, that they charge based on the success fee on the incremental GM, so gross margin. If you can really agree with the client, what is the impact of your solution, then that's great, but quite often, this leaves some room for discussion. So you're really lucky in this sense. Okay, guys. So I think we're gonna stop here. Guys, thank you very much for joining. As we said, this is just the end of the beginning, as Winston Churchill once said. So we have plenty more to come. We're gonna just then approach you with the plan, for the whole Movens Academy. So expect, communication from us in the near future. As I said, if you want to ask any further questions, get in touch with us, just feel free. If you want to get a recording, write us. If you want to get the slides, write as well. So thank you very much. Hope it was an interesting and insightful hour for you. It was for us. So we had a great fun. Hope you had at least, a tiny fraction of the fun that we had. And we're looking forward, to seeing you in our future webinars.
Yeah, thank you guys, and see you in the future.